Most people think they understand XRP. They look at one number, 100 billion coins, and assume they know everything there is to know. They believe all of that supply is available, tradable, and sitting on exchanges. That assumption is wrong, and that misunderstanding is exactly why most people are not prepared for what happens next. Imagine walking into a store that claims to have 10,000 items for sale. But when you reach the counter, you discover that only a few hundred are actually available. The rest are locked away, reserved, or permanently inaccessible. What happens to the price of the remaining items? It doesn't move slowly, it explodes. That is the situation XRP is in today. On paper, XRP has a large supply. In reality, only a small fraction of it can actually move freely in the open market. A significant portion of XRP is locked in escrow. These coins were placed there intentionally to control supply and prevent sudden flooding of the market. While a limited amount can be released on a schedule, anything not used is simply locked back up. This system acts as a pressure valve, not a free flow of liquidity. Then there are institutional holdings. Founders, early stakeholders, and long-term partners control massive wallets that rarely move. These holdings are not meant for speculation or daily trading. They exist to support infrastructure, liquidity corridors, and long-term network stability. In practical terms, these coins might as well be offline. Another large portion of XRP is gone forever. Lost keys, forgotten wallets, exchange failures, and early mistakes have permanently removed billions of coins from circulation. They still exist mathematically, but they will never be spent or sold. They are ghosts in the ledger. Exchanges also hold reserves, but these coins are not part of active trading supply. They are operational balances, used for withdrawals, settlements, and system stability. They do not behave like free-floating liquidity. When you add all of this together, the amount of XRP that can actually be bought or sold at any given moment is far smaller than most people realize. This is where market capitalization becomes misleading. Market cap assumes every coin is available at the current price. But when most of the supply is locked, lost, or strategically held, that calculation becomes a fantasy. It looks impressive on paper, but it doesn't reflect real liquidity. History has shown this pattern again and again. Gold prices surged when investors realized most gold wasn't actually available for trade. Oil prices exploded during supply shocks, even though total reserves were massive. Rare assets have always repriced violently once scarcity became obvious. Even Bitcoin followed this path. When supply reductions became undeniable, price didn't move gradually. It moved aggressively and unexpectedly. Markets don't adjust politely when illusions break. They correct suddenly. Now look at demand. Global financial systems are changing. Banks are modernizing payment standards. Cross-border settlement is becoming faster, cheaper, and more digital. Ripple's technology is already being used by institutions to reduce friction and cost. Digital currencies, stablecoins, and tokenized assets all require liquidity bridges. Fuel is needed for transactions. Every XRP transaction permanently removes a tiny amount from supply. Over time, that adds up. As adoption increases, more XRP becomes locked into institutional use, not available to retail investors, not visible on exchanges, and not returning to circulation. That creates a tightening loop. Supply slowly shrinks, demand quietly grows, liquidity thins, and then one day, the market realizes the truth. At that moment, price discovery does not wait for everyone to catch up. It moves ahead without them. This isn't about hype. It's about math, structure, and timing. When scarcity becomes undeniable, repricing is not optional. It is unavoidable. Most people won't be early. They'll arrive after the shift, wondering how it happened so fast. The real value of XRP isn't obvious today, and that's the point. Markets rarely reveal the truth before the move. They reveal it through the move. The question isn't whether change is coming. The question is whether you recognize it before the rest of the crowd does.